You say that December was, in fact, a mistake and that a cut today would be a welcome precaution. But more importantly, you say the White House and the Fed need to arrive at a thoughtful truce. What would that look like?
Well, I think from the Fed's perspective, being clearer about what it takes to hit its inflation objective and clearer in communication. The Fed chair has talked a lot about, well, maybe there's U.S. weakness, but we're not really seeing U.S. weakness. The problems are from the global economy and with the failure to hit the inflation target. On the White House's side, it needs to understand that a slightly lower federal funds rate isn't really going to change the equation very much. The big issue on business people's minds is policy uncertainty and tariffs. So both sides need to calm down a bit.
Well, Navarro this week told CNN that if we pass USMCA and the Fed cuts 100 basis points, he can guarantee Dow 30K. I mean, it's pretty clear what their objectives are, isn't it?
Well, I would question that piece of math, but it is certainly true that if you weigh the balance of risks, probably the last Fed rate hike was too much. So taking it back would be a good idea. Having said that, I hardly see getting to 30,000 on the Dow for something like that. We could, though, if we got better trade policy and less policy uncertainty, have a firming economy. That's what the White House should be focused on.
So, Glenn, is President Trump right to come out and argue that the Fed has moved too soon and too fast with this tightening cycle that we've seen?
Well, I think the Fed has made some mistakes, both in substance and in communication, and sometimes White Houses point those out. I think the president would be better served, perhaps, by focusing on government policy, trade, fiscal policy that are more under the White House's control. But I think his criticisms of the Fed are not off point. By the same token, I think the Fed could learn more by engaging with more divergent views from the business community, from economists, and diversifying its own groupthink. So I think there's some light there as well as heat.
So, Glenn, is the Fed's independence at risk based on how the president has been addressing his concerns with Fed action? And is this sort of listening and engagement tour you're talking about, if so, a way to deal with that?
Well, to answer the last part first, I think yes. If the Fed were more engaged in that way, it would only help itself. And I think Chair Powell is well liked on both sides of the aisle and by the business community and could well lead that effort. There is always a worry about central bank independence being compromised, and it would be a huge economic problem if that happened. Having said that, I think where we are now, if both sides just stick to the things they can do well and the communication under their control, this should be fine.
How should the Fed be assessing inflation?
Well, given that the Fed hasn't hit its 2% inflation target, certainly one reason to have a more accommodative policy is till, on average, defined over some period, the Fed has hit that target. That would be a clear signal to the public. The Fed, however, has talked in more evolving measures of data dependence, which are a little bit confusing. I think going back to first principles would help it.
So it seems like a foregone conclusion that the Fed is going to cut rates today. But how do you think this plays out as the year progresses? I mean, there's also a lot of chatter on Wall Street, for example, about the balance sheet reduction program and what happens to that.
Well, I think it will be up to Chair Powell and colleagues to really communicate how they're thinking about that. So, for example, are they focused on economic conditions in the U.S.? Are they focused on interest rate trends and conditions abroad? Tell people where to look. How should people think about the inflation target and the lack of success in hitting it? Those are the kind of communications the Fed can do. At the same time, the president and the White House can really focus on getting policy more clear in the minds of business leaders and less uncertain.
Finally, Glenn, since the blackout window began, this conference board number was pretty incredible. ADP solid today, core PCE. I just wonder, when people argue that they've locked themselves into this cut and that they need to ask themselves how that happened, what do you say?
Well, I think if the Fed were to make an argument for a cut, it would be less about current U.S. economic conditions for the reasons you just said, but more in terms of global weakness, in terms of central bank trends outside the United States and their effect on the dollar, foreign exchange value of the dollar, and on the Fed's lack of hitting its inflation target. I think that's a better argument than evolving data dependence on the U.S. economy.
Lastly, Glenn, and I ask this because of your position within the financial sector as well, and some of the positions you have held there. The fact that we have seen this prolonged period of low interest rates, you do have the Fed now poised to follow suit with other central banks around the world in easing again. What do you expect that effect to be on the sector, and not only banks, but also insurers?
Well, I think, low interest rates and low interest rate spreads obviously compress margins in the financial services sector, but they also lead firms to innovate. I think the bigger question going forward is whether fiscal policy is positioned to step in and help central banks in the future so that not all the pressure is on central banks.